Hey, what's going on, guys? So before we get into the actual video on chart patterns, I wanted to let you know that I have a free ebook for beginners, experienced traders. Everybody could get use out of this ebook. It goes over chart patterns in detail, how to trade them, where to put your stop loss, where to enter, and all of that's free. The link will be in the bio to get your free ebook. I think the chart patterns section is chapter 10, so check that out. Enjoy the chart pattern video. Let's go. What's going on, guys? Welcome back for another video. Today I want to be recapping the breakdown or the start of a new trend in the SPY or the overall market. The SPY tracks the S&P 500, which is an average of, all the major companies in the US equity market. So focusing on the SPY lets you get an idea of obviously what the overall trend is. And right now on my screen I have none of my indicators. I just have the charts. Focusing on the price action, I got the TTM squeeze on the bottom. So I wanted to focus on chart patterns today because right now in the overall markets we are at a standoff where we are looking to break to the downside on a rising wedge pattern. Now, for those of you who don't know what a rising wedge pattern is, or maybe you're new to trading, you need to focus on memorizing these type of chart patterns and really aligning them into your overall trading system, because they're pretty much required that you can visualize them on a consistent basis and then react to trading them. So for those of you who aren't very familiar, there's a few steps you could go to get a hold of this. Obviously I'm going to pull it up on my other screen here. You could just Google, stock chart patterns and, get a feel for how all these work. And what I want you to focus on today is the symmetrical triangle pattern. And we're going to go into the hourly chart now on the SPY and look at the pre-market action from Friday's session. So what we're seeing, we could even drop down into the 30-minute. What we're seeing is a bit of that, symmetrical triangle. This is a bearish pattern, right? We're in an overall downtrend for the short term. We're looking to break down on the daily, right? I mean, we're gapping below the trend line, now looking to break down on some volume. So now when we go into the 30-minute, we're seeing that overall time frame on the daily chart and saying, okay, we're looking for some plays to confirm a bearish trend or take advantage of a breakdown to the downside. So what we have perfectly off the bat is a forming triangle. We have a bearish triangle, right? Confirmed downtrend, a little bit of a bottom. If we go back to Google, we'll pull this one up. Look at this symmetrical triangle. You see it squeezes at the end and breaks to the downside. Now, to predict that break to the downside is not necessarily easy. You need to wait for confirmation. And when you get confirmation, it comes with strong volume, a candle closing below that trend line, your indicators pointing to a downturn. And I'm not pulling up the indicators just yet, but that's a whole nother lesson that needs to be accorded. I'm just focusing on the price action right now. So obviously we have that triangle, we have that breakdown. The early morning was very, very choppy. If we look here, we could even drop down to the 15-minute and see how choppy this is. We were trying to fake around the top of this trend line, trying to break out to the upside, and then ultimately was just unbelievably choppy and eventually broke down around 11 o'clock. So we actually held this trend line again as the low of the day and then rallied off of it and then, again, stalled by the high of the day. And that eventually led to the breakdown. So what I'm going to do now is pull up my indicators to, I guess, use a idea of what I'm looking at. So here's the 15-minute chart, right? So what's key about this is this teal line here is a 50-day simple moving average, and up here we got the 180. Obviously, both of these are in a pointing downward trend. We're in a downtrend, right? So we are rejecting this 50-day moving average, which is a great tool to use. And what I want to focus on down here is looking at the TTM squeeze indicator. So when these dots go from green to red, red shows an area of consolidation. Now, what we know about chart patterns is that in order to get a big breakout or breakdown, we need consolidation in the setup. So here you get to this tight edge of the wedge, right? So what happens when we get to this, as you can see from all of these major patterns, is that the stock chart gets so tight that the price action has nowhere to go but to break out or break down. In this case, we have a bearish pattern forming here on the pre-market, And then we have our squeeze showing consolidation, tight consolidation. So this move, when it goes red, confirms that we're anticipating a breakout or a breakdown. And then when you confirm the trend of the market, the overall daily chart, that's when you can put pieces together and say, okay, we are looking for a bearish move. Now, this doesn't mean you can't scalp options on the long side here, but to capture the overall move, you need to focus on the bigger picture. And in this case, we had the breakdown coming around 11 o'clock and ultimately provided a great play from 284 down to lows of 281.50. Excellent play, very predictable, and it's easy to line things up, but the number one key to making these trades is to visualize it. Visualize it consistent, visualize it often and throughout every day on any time frame. You need to be able to spot these breakdown patterns or breakout patterns when we are in an uptrend. This is huge, guys. I can't express it enough that it just comes with time, it comes with experience, and to get better at it, you need to practice it. So you always need to be studying. I can't stress that enough. And I hope this made sense. I hope it enlightened you to open your eyes to the bigger picture. If it did, drop a like. It really helps support the business, support the YouTube channel, and as always, help other traders grow. So that's it for this video. Stay tuned. Hit that subscribe button for more videos. We'll be up to date with it and trying to get more content out on the every other day basis. So drop that like, drop that subscribe. I'll talk to you guys later.